What's going on, world? Good morning. I wanted to just jump on this podcast and on this YouTube very quickly, just to highlight some things that I learned, just some lessons learned from the Bitcoin conference, and give you my own take on what I experienced. It's in particular to one session that I got a chance to listen to that was a great session that they did. There was 4 people on the panel. It was Jeff Ross, Jeff Booth, Mark Moss, and Preston Pysh, and they did a discussion around the Bitcoin macroeconomic landscape, and it pretty much just highlighted some of the challenges, the narratives that are being portrayed around Bitcoin right now, this year, 2022, and also what we have forward to look for throughout the year with Bitcoin and the problems that it solves on the macroeconomic level, on a global level. And it was really a good conversation around economic cycles, what we're seeing in history, what we've seen in the past. And they actually highlighted a book that I'm reading by Ray Dalio. It's called The Changing World Order, Why Nations Succeed and Fail. And it really just highlighted a lot of important points on being able to understand what has happened when we've had recessions, depressions, what happens to our money supply, what happens with inflation, how that causes in an economy to create more of a widening gap between the wealth gap is starting to widening. So I want to just highlight some of those important points that I heard throughout the session. And the first thing was by Jeff Ross. He talked about don't trade Bitcoin, save Bitcoin. It's the ultimate savings technology tool. And what I got out of this is that they mentioned how, with your savings account or anything that you're building for the long term, you're not trading it. You're constantly investing for your future self. You're putting money down consistently, whether it's every 2 weeks, every week, every other day, whatever works best for you. And you're constantly stacking your sats is what they kind of talked about, and how you want to just not really think about it, but look up 10, 20 years down the line, and you're going to be happy with the decision that you made today. Now, granted, I'm not giving any advice. Keep in mind that with any type of asset, you're going to have market volatility, and you're going to have just market risk and uncertainty with the prices can fluctuate up and down. So definitely keep that in mind, and also understand that when it comes to crypto, it tends to be a lot more volatile than in stocks, for example. So another concept that I really enjoyed throughout this session was Preston Pysh. He talked about the aspect of inflation and how we're constantly seeing that when you look at the bond market and you look at interest rates that you will get on a bond, there's a negative spread right now because we're sitting at inflation being at 8.5% as far as what they tell us. We know typically that could be a lot higher compared to the public metrics that are being, facilitated through different media outlets, but we won't get all into that. But what they're telling us is it's 8.5%. And if you look at like a 30-year treasury bond, that yield that you would get on a bond is only like 2.5%. When I say yield, think of a return of investment. Once again, when you're investing in the bond, it's a payment that you're paying towards a government issue, whether it's a bond or a note, and you get paid back semi-annually payments. Typically, that's every 6 months. So when I say negative spread or negative interest rates, what I'm saying is when you look at inflation at 8.5% and you take that from a 2.5% yield that you're getting on a bond, that's giving you a negative interest rate, a negative return of investment of about 5.5%. So what they were discussing within the session is that we have seen one of the biggest negative spreads that we've seen in our history. When you look at all the way back to the Great Depression back in the 1930s, we are seeing one of the biggest negative spreads, and that we should all take that with caution and understand that there will be a repricing in the market, and there's going to have to be some reset or some type of way to make this go back to normal, because right now with inflation running at higher levels, there is a lot of risk that we're seeing, a lot of different asset classes. So that was one thing that they really talked about, and how the inflation conversation, we've already have been constantly seeing inflation going up gradually over the last 5 or 10 years. So this isn't anything. They mentioned that, there always tries to be a narrative that, oh, we're having inflation because of Russia, Ukraine. But what a lot of people on the panel was saying is that this has been a reoccurring issue when you look in history. A lot of that is playing a role into this is, as we know, with money printing from the Federal Reserve, and just the manipulation that you can tend to see when it comes to policies, the way interest rates can be controlled, and just how a lot of manipulation. And that was one of the themes throughout this session. They were talking about manipulation from the Fed side, the government side, with our money supply, and how that's creating friction within our economy when we're seeing, supply chains breaking down. We're seeing gas prices go up. We're seeing the cost of groceries going up, the cost of shelter going up. So it was a lot of good points highlighting those different aspects. And one particular guest on the panel that I really enjoyed was Mark Moss and Jeff Booth. These guys are very like-minded. They really understand economic cycles. They understand how technology, we've had advancements with our technology every 50 years when you look in history. And what Mark Moss was highlighting was, he talked about how we have cycles within our economy that happens every 250 years. And they brought up within Ray Dalio's book that I mentioned, Ray Dalio actually talks about how there is countries that will have like these cycles where they are only in control for only about 250 years. Then when it gets to that point, there's another nation that comes along. And he talked about like how China is really that competitor to the US, and how the US, we've been in control for so long. When you think about just our, global supply and things like that, when you look at our technology, politics, we tend to have more of a dominant power when you look at other nations. But China is a nation that has really taken the rank when it comes to technology. When you talk about imports, exports, we get a lot of stuff from China. When we talk about their technology thriving, they were trying to say that they are these cycles that happen every 250 years. And then also there's big economic debt and political cycles within that 250 years, that there are resets every 50 to 100 years. So Mark Moss was just pretty much just saying that, during this 250-year time frame, we are seeing changes with our political, our financial, and our technological aspects within our economy all converging at once. And they were really highlighting how, when you look at technology, for example, there's typically every 50 years where there's some big advancement, in how with Bitcoin is really providing that change of the future of finance. When you think about it being a payment network, when you can be able to facilitate transactions decentralized in a trustless manner, that it provides more alternatives for people that don't have the options to opening up a bank account, especially when you talk about people that are unbanked, that don't have any bank accounts at all. And just the value of it, from it being a store of value, it being a reserve currency that can be used as a medium of exchange, to be able to facilitate goods and services throughout our economy. So I thought it was very interesting that they were talking about how right now we're really in a technological revolution, with everything changing, and we're seeing a transition the way technology is moving. And they also talked about how, like, with our financial revolutions, or when there's different cycles going on with our financial system, that's typically every 80 years. And they really just was trying to say that right now we have all of this converging, and that we have to pay attention that through different periods of history, there's what's called these long-term debt cycles, where inflation starts to become a more prevalent issue. We're seeing a higher level of money supply, more money printing, which creates that reset or creates that transition where things are going to eventually go back to normal, and that there's going to have to be a change. There's this can't stay the same way, and to also have an economy to thrive. When you have too much debt in the economy and there's not enough assets or enough equity to cover that debt, in a sense, the economy is just upside down. It's not really, it's a false narrative of the economy is booming or there's economic growth, where there could potentially be a downturn because of all of the debt that's in the system. And that's what led to Jeff Booth. His whole perspective throughout this conversation was there needs to be a change that needs to happen, because the way that our monetary system is set up now is all credit based. So there's so much manipulation when it's credit based, because everything is just so artificial. It's not real. So he really was just trying to talk about how the reason why the dollar was removed off the gold standard back in 1971 was because our Federal Reserve System, they had to create a alternative to increase the velocity of money. And when I say the velocity of money, all I'm pretty much saying is that it's simply how long it takes money to move from one entity to another. So just moving from one business and going to the other. So let's say you're taking money out of your bank account and then you go get a haircut or you go get your hair done. They're measuring, that's what I mean when I say the velocity of money, and it's the rate at which consumers and businesses in an economy collectively spend money on goods and services. So they had to create a credit-based system where it creates people to spend their money quicker. So with the credit-based system, it is increasing people in the economy to just go spend their money, to go take out debt, whether to go get a credit card or to go shopping or to buy a mortgage, and just using debt to increase the velocity of money. So what Jeff Booth was saying is that the most important aspect of Bitcoin is that it doesn't require debt for the velocity of money. Therefore, there's a system in place that's a fixed supply. It can't be manipulated. It can't be printed at an unlimited level. When you think about the dollar and us living on a credit-based system, the money supply can be printed to an infinite amount of money. So with Bitcoin, it has to be that transition to a better system, a system that gives people, everyone in an equality aspect of thriving in an economy, and not creating a wealth gap where when the Federal Reserve does different actions that increases the velocity of money, or let's just say that they implement interest rates or they're buying financial assets, all that's really helping is the people that already have those financial assets. But the people that don't have any assets at all or have very little, it creates a bigger wealth gap. And that's what they were saying. And that was just some of the concepts, some of the lessons learned, and just wanted to share those with you all, and just think about, understanding where we're at now in our economy and why Bitcoin provides that alternative, especially to central banking, and also having more of a decentralized approach when it comes to money. So if you all can continue to like, subscribe, and share this video. Don't forget to hit that notification bell, because you'll be notified every time I drop a video. And if you're listening on a podcast, continue to rate, leave a review. It definitely helps. And I thank you all for watching and listening, and take care.